Thanks for joining us at xm.com for this Forex Preview video. I'm Cristina Marujos. With me today is investment analyst Cristina Barcenidu, and we'll be looking at the all-important data we're expecting out of the Eurozone area this week. Cristina, we're expecting inflation to have further heated up as the flash estimates are expected to show on Friday, while preliminary GDP numbers for the first quarter are out on the same day. What are we likely to see in the data, and what kind of picture will they paint for the Eurozone area?
Hi, Christina. Indeed, we have some important data to watch on Friday, especially as the war situation in Ukraine is getting more complicated. And that's mainly questioning whether the Eurozone will sustain the relatively stronger growth in 2021, given the continuous increase in consumer prices and the product supply shortages. The latest headlines announced that Russia briefly cut its gas supplies to Poland, which covers about 50% of national consumption before Russia resumed its flows. So it seems that things are not moving in the right direction yet, and negative economic spillovers from the war could persist for longer. Well, the truth is that data releases in the first quarter of the year were not very encouraging either. Retail sales weakened, consumer confidence plunged to the lowest level since 2020, and manufacturing and services business PMIs also showed some deceleration despite the remaining comfortably in the expansion area. So although any growth slowed down in the 3 months to March could be reasonable, I think the period following the removal of lockdowns has probably helped the Eurozone economy to sustain some growth. Current expectations point to a slightly stronger 5% annual expansion from 4.6% previously. The quarterly expansion is expected to remain steady. The war in Ukraine started at the end of February, and that suggests that any negative economic spillovers may be more evident in the next GDP release. So regarding inflation now, flash CPI figures are for the month of April. There are rumors that inflation could soften because the comparisons are now based on the 2021 high price level. So the annual growth rate in consumer prices could ease a bit because of those comparisons. Though any pullback could come later in the year, for now investors believe that inflation has probably reached a new high at 7.5% in April from 7.4% previously, while excluding food and energy volatile prices. The core measure could also reach a new peak at 3.4% year on year. Overall, the picture may not be very discouraging for now, and if inflation continues higher, that may be another indication that monetary tightening is appropriate in the region in the coming months.
Turning to the euro now, markets expected the single currency to get a boost from Macron's victory on Sunday, but that didn't appear to be the case after all. Can this week's data provide the euro some support?
Indeed, Macron has secured a second term, but the euro didn't react, as you said, because although there were fears that he could lose the battle against his rival Le Pen, the majority of people were optimistic about his victory. So the news didn't surprise investors. Instead, currently, the euro's outlook is very disappointing. The currency can't stop falling, and it has already crossed below its pandemic low of back in 2020 to return to 2017 levels. Probably much stronger than expected GDP and inflation data could support the ECB's hawkish tone, helping the euro correct higher this week in hopes that higher interest rates could happen in the eurozone. Though that could be only temporary, since the developments around the Ukrainian war are currently the main market movers for the common currency. Unless we see a ceasefire, for example, or at least some signs that tensions between Russia and Ukraine are cooling, the downtrend in the euro could further extend. Now, from a technical perspective, there's another support around 1.05 in euro dollar before we finally reach the 2017 bottom of 1.0330. 1.05 is not far below the current market action now, so a rebound could technically happen. Otherwise, I think the sell-off could further worsen the euro's long-term outlook, especially if that comes after weaker inflation and GDP growth figures.
Cristina, thank you for joining me today, and thank you for watching this Forex Preview at xm.com.